how's everyone doing today? Welcome to this week's member roundtable. My name is Roslyn Fawns and I will be your host for today. And this week we are talking all about how to raise capital during a recession. Now, in this economic downturn, being a startup is more difficult than ever. Interest rates have risen, which means the cost of capital for an investor has also risen. Meaning startups have to work harder to actually generate higher returns in this type of environment. At the same time, the changing consumer buyer patterns are making it super difficult for startups to actually become profitable. I'm actually going to begin with more of a general question. And by the way, everyone who's on the panel today, this is open, so feel free to jump in whenever you like with your insights. And I want to know, what is your take on the current economic recession?
So I will start. My name is Erez Hevroni. As Roslyn said, I help a lot of startups in different stages, from early stage to A round, B round, C round, and D round. So I can say what do I see in this industry in the last. I'm raising capital from 2006. So I saw a lot of interesting markets and challenges in the market, and how that affect valuation and how that affect founders and startups. And we see some very, very interesting momentums that's happening right now. Actually, just when everyone is coming back right now from vacation in the summertime, there's more interest, and now basically investors are more open up to hear interesting deals. That the investors are very, very cautious right now about where to put their money. You really need to know how to put your message out there and create very interesting momentum. On the Series A and B, I see it's very, very challenging as well, because they are taking your valuation to a whole different level. And I see companies basically cutting their valuation into half, to 60%.
Yeah.
Sometimes. And you have to be aware that that's what's going to happen. And when it comes to, it's very interesting time right now. I would say the venture capital understand that there are, it's a buyer market and it's not a selling market in a way.
The biggest thing for me, and I want to highlight Orri for this. Like I met Orri when he really tried to raise capital in tough times and didn't have that customer base. You know what I mean? And they had a very young founding team, but they still were successful. You know what I mean? And I think his story stands out when it comes to how to raise money in this time. And definitely want to hear his story, man.
I can tell you that. So Ophir, when you met me, it was actually, I would say it was an easy time to raise capital because it was 2019, 2020, I think. So in our case, we, like Ophir said, we're young founders, first-time founders trying to raise when we were like 25, 24 years old, 2020 or so. And we weren't able to do it. We had a lot of interest. Like I even flew to Miami with Ophir to like meet like this like billionaire dude. That's where I met Ophir. But no one was pulling the trigger on it. And that was kind of our what kept happening for like 6 months. And then for us, the biggest change is that we met. One, we got into an accelerator. That was a really big deal because they basically gave us all the networking kind of stuff that we were lacking and the resources we were lacking. So that taught us a lot about how to pitch our story in a way that was correct for VCs, because they have a certain kind of thing they're looking for, they have to understand. And then the other thing is basically meeting an advisor that fills in the gaps that we had as first-time founders. So when we met investors, it was constantly like, okay, you guys have a really good idea, really good potential, but you don't have the team to really give us confidence that you're able to pull it off. We had a background of like neuroscience and chemistry, so like we were smart, but we don't have the business background. And then what happened is after we got to the accelerator, we were able to meet with someone who was basically created the biggest company in our space. And once you have that person back you, like I'm talking like a $50 billion company in our space, and when you have that person kind of stand behind you. Even before he invested, because at the beginning he was just an advisor for us, but ended up being an investor as well. It got to a point where investors were fighting to put in money for us because, I mean, despite the environment, there was just so much interest. So we had about, I'd say, over $3 million in offers. We took around a little bit over 2, basically just isolating for the best strategic value adds we could get. But there weren't major trade changes outside of just like our vision being better and our team being better through that advisor.
This is, by the way, one of the reasons we're bootstrapped, because the time it takes, and I just want to showcase the commitment those people have, because they went, Anton, how many meetings have you done with investors?
Like 200-300, I think.
Oh, wow.
Yeah, Orri, how many if you take into account
Not
the
that many.
accelerator?
Definitely a lot less. I probably done 50-ish with angels, and then like I didn't meet with many VC funds, maybe like 5, and then we had like only one of them I think did make us an offer. But also I met very strategically. It's like I can comment on that later, but
But Ophir is
Yeah,
not
so
about just about the numbers of meetings. Sometimes what I see a lot of the mistakes of startups is that they go to the wrong investors. They go to investors that will never invest in them because they are not in their stage. They didn't do the research, or they don't know their options, or they don't know even if they have a liquid powder on in their portfolio right now to invest in you. So sometimes you're just wasting your time and talking to investors that maybe only invest in B stage and up, and you are in early stage, okay? And then they take the meeting, they speak with you because they just want to fill up their gap, and you're wasting time on the right investors.
The thing is that nobody tells you how venture capital firms are set up. They don't tell you that there are these different personas. They play different roles. No one tells you that. So I feel for a lot of people that kind of innocently go into fundraising, and then they waste a lot of time. They'll start bottoms up. They'll go analyst, principal, GP, if they ever get to it. But they're having hundreds of calls. But the fact is, most of the time, the other part is just kind of gathering information. Maybe they're looking at potential competitors, and they're just kind of having a casual conversation. But it's like there's a saying like, let's get real or let's not play. Like, they're not really real. These are not real. They don't have an intention to have a serious conversation. They're just having calls with you because that's their job, is to have like an SDR in sales. That's their job. Set up meetings, have a lot of conversations. And it's sad when you don't know that, and then you end up spending a lot of your energy and time, and even getting discouraged by like a 20-something-year-old analyst who tells you, I don't know if there's an idea. There's no one to tell you that you have a bad idea.
Miro, that's a great point, because I feel like there's a lot of gatekeepers in a way to get to the decision makers. And I think one of the most important things when you raise capital is to have the right framing, all right? When it comes to the first conversation that you have, if it's you speaking with someone on the phone, and this is a good advice for all the founders that listening to us, is that ask, what do you do? Are you an associate? Are you an analyst? Are you a GP? What do you do in the venture, in the VC, or what do you do as an angel investor? Or if it's a family office, I work, for example, with a lot of family offices, and they have a lot of different personalities in the organization, and you have to understand who's making the decision and who you're talking to. I would say also, I saw some amazing technology companies that brought the wrong investors, and not all money is good, and sometimes investors can break companies and then will not allow you to raise the next round. I will say for all founders out there that sometimes we are in the needy energy, and it's like going for a girl and just say, oh, I want you, please be my girlfriend, and everybody, although not right girls will come to you, or all and you're going to take anything possible into your portfolio, into your company. Don't do that. All right, smart money is better money.
Question for the panel. I've been talking to a good amount of investors and hedge funds lately. My purpose is to bring attention to underserved startups in my network. The problem is every investor is looking for the next unicorn, while only 0.004% of businesses end up becoming unicorns. How would you approach fundraising as a pre-seed startup that realistically isn't tackling a big enough problem to become a unicorn?
So one, like VCs are specifically going for unicorns because that's how the math works. So like that they have to. So that's not really a choice. So it means your options are just like other sources of capital. So like angels or like banks, like stuff like, I mean, there's a lot of other sources, but I think that if you're not building a venture backable startup, then you shouldn't be giving up equity a lot anyways. It should just be a bootstrap business, and there's nothing wrong with that. So I don't necessarily think that, like, I don't think there's a problem necessarily. I just don't think that VCs go after startups that could become multi-billion-dollar companies.
We also have one from Jacob. So Alex Hormozy says to always talk on a 3rd to 5th grade reading level, even when speaking with executives and selling. Do you all agree when it comes to speaking with investors that should be the case?
No, I will say no. I think with investors, especially with VCs, they look at you as you will educate them about the future of your industry. All right. So for example, right now I'm working with a company that creating a memory chip in AI for the